US stock futures are down sharply. Investors are worried. The financial markets are reacting strongly to the latest developments in the ongoing trade tensions between the United States and China. The uncertainty surrounding the economic policies has led to a significant drop in stock futures, causing widespread concern among investors and traders alike. President Trump's tariffs are causing concern. The administration's decision to impose tariffs on a wide range of Chinese goods has been met with apprehension. These tariffs are part of a broader strategy to address trade imbalances and protect American industries. But they have also raised fears of retaliatory measures from China, which could escalate into a full-blown trade war. The tariffs target Chinese goods. Specifically, the tariffs are aimed at products such as electronics, machinery, and various consumer goods that are imported from China. The goal is to reduce the trade deficit and encourage domestic production, but the immediate impact has been a disruption in the supply chain and increased costs for businesses and consumers. This has sparked fears of a trade war. The potential for a prolonged economic conflict between the world's two largest economies has investors on edge. A trade war could lead to higher prices for goods, reduce global trade, and slower economic growth, all of which are negative for the stock market. The Dow Jones Industrial Average is down. The index, which tracks 30 large publicly owned companies in the United States, has seen a significant decline. This drop reflects the broader market's reaction to the uncertainty and potential economic fallout from the tariffs. The S&P 500 is also down. This index, which measures the stock performance of 500 large companies listed on stock exchanges in the United States, has also been affected. The decline in the S&P 500 indicates that the concerns are widespread and not limited to a few sectors. The Nasdaq Composite is down too. Known for its high concentration of technology stocks, the Nasdaq has also experienced a downturn. This is particularly concerning as the tech sector has been one of the strongest performers in recent years, and its decline suggests that the impact of the tariffs is being felt across various industries. These are all major stock market indices. The simultaneous decline in the Dow Jones, S&P 500, and Nasdaq Composite highlights the broad-based nature of the market's concerns. Investors are closely watching the developments and hoping for a resolution to the trade tensions that could stabilize the markets and restore confidence. The tariffs have raised concerns. A global trade war is a possibility. This would have serious implications for the global economy. Businesses are worried. They rely on global trade. Consumers are also worried. They may see higher prices. Jamie Dimon is the CEO of JP Morgan Chase. He's expressed concerns about the tariffs. He says they could hurt US economic growth. Treasury Secretary Scott Bessent defends the tariffs. He says they are necessary. He believes they will protect American jobs. The tech industry is particularly vulnerable. With its intricate web of global supply chains and reliance on international trade, the sector stands at the forefront of potential disruptions. The ongoing trade war has cast a shadow over the industry, creating an atmosphere of uncertainty and concern among stakeholders. Many tech companies rely on global supply chains. These chains are the lifeblood of the industry, ensuring that components and products move seamlessly across borders. From semiconductors to finished gadgets, the tech sector's dependence on international logistics is profound. Any disruption in this delicate balance can have far-reaching consequences. The tariffs could disrupt these chains. Increased costs and delays in shipping can lead to production slowdowns and shortages. Factories may find themselves unable to source critical components, leading to empty shelves and frustrated consumers. The ripple effects of such disruptions can be felt across the entire economy. The Magnificent Seven are 7 of the largest tech companies. These industry giants have become household names, driving innovation and shaping the digital landscape. Their influence extends beyond technology, impacting various aspects of modern life and commerce. They are Apple, Microsoft, Amazon, Alphabet, Google's parent company, Meta, Facebook's parent company. Each of these companies has carved out a dominant position in its respective field, from consumer electronics and cloud computing to e-commerce and social media. Their operations span the globe, making them particularly sensitive to international trade dynamics. Tesla and Nvidia. These two companies represent the cutting edge of technology in their domains. Tesla, with its electric vehicles and energy solutions, and Nvidia, with its powerful graphics processing units, are both heavily reliant on global supply chains for their advanced components and materials. These companies are likely to be hit hard by the tariffs. The imposition of tariffs can lead to increased costs for raw materials and components, which in turn can squeeze profit margins. Stock markets have already shown signs of volatility, reflecting investor concerns about the potential impact on these tech behemoths. Employees within these companies are also feeling the pressure as job security and future growth prospects come into question. The tech industry, known for its rapid innovation and growth, now faces a period of uncertainty and potential stagnation. European markets are also down. Investors are worried about the impact of the tariffs on the global economy. Germany is a major exporter. It is particularly vulnerable to a trade war. The German DAX index is down sharply. Section 6. Asian markets react to trade tensions. Asian markets are down too. China is a major trading partner for many Asian countries. The tariffs are likely to hurt Chinese exports. This will have a ripple effect throughout Asia. Section 7. Broader economic concerns emerge. In this section, we delve into the growing concerns surrounding the global economy, which have been exacerbated by ongoing trade tensions and geopolitical uncertainties. The trade war is raising broader economic concerns. Oil prices have fallen significantly, reflecting the market's anxiety. This decline in oil prices is not just a minor fluctuation, it indicates deeper issues within the global economic framework. The energy sector, which is often seen as a barometer for economic health, is showing signs of distress. This is a sign that investors are worried about global economic growth. The falling numbers on stock market tickers and the anxious faces of investors tell a story of uncertainty and fear. Investors are pulling back, reallocating their assets and seeking safer investments. This behavior is a clear indication that confidence in the market is waning. The International Monetary Fund, or IMF, has warned about the risks of a trade war. In a recent press conference, IMF officials highlighted the potential for significant economic disruption. They emphasized that the interconnected nature of today's global economy means that no country is immune to the ripple effects of a trade war. The IMF says a trade war could lead to a global recession. This warning is not to be taken lightly. A global recession would have far-reaching consequences, affecting everything from employment rates to government budgets. Business professionals around the world are already feeling the pressure as they navigate an increasingly volatile economic landscape. The potential for a global recession looms large, and the stakes could not be higher. The impact of these economic concerns is already being felt in various sectors. Factories are reducing their activity, and shipping containers are at a standstill, indicating a slowdown in trade and manufacturing. This slowdown is a direct consequence of the uncertainty and fear generated by the trade war. Small businesses are particularly vulnerable in this climate. Many small business owners are finding it difficult to manage their finances and keep their operations running smoothly. Empty storefronts are becoming a common sight, as businesses struggle to stay afloat amidst the economic turmoil. Economists are closely monitoring the situation, analyzing data and providing insights into the potential outcomes. Financial news reports are filled with discussions about the possible scenarios that could unfold if the trade war continues. The consensus among experts is that the longer the trade war persists, the greater the risk to the global economy. Governments around the world are also taking note of these concerns, and officials are holding meetings and reviewing policy documents to determine the best course of action. There's a growing recognition that coordinated efforts may be necessary to mitigate the impact of the trade war and stabilize the global economy. International trade agreements and diplomatic discussions are becoming increasingly important. These efforts aim to resolve the trade tensions and restore confidence in the global market. The hope is that through negotiation and cooperation, a resolution can be reached that will prevent further economic decline. At the community level, people are coming together to support one another. Local businesses are finding creative ways to adapt and survive. Community meetings are being held to discuss strategies for weathering the economic storm. This sense of solidarity and resilience is crucial in times of economic uncertainty. Despite the challenges, there is hope. The The global economy has faced crises before and emerged stronger. With careful planning, cooperation, and a focus on sustainable growth, it is possible to navigate these turbulent times and build a more resilient economic future. The sunrise over the city symbolizes a new beginning, a chance to rebuild and thrive once again. Section 8. Recession risks and market volatility. The stock market is volatile. Investors are uncertain about the future. This uncertainty is leading to market swings. The VIX is a measure of market volatility. It is often called the fear index. The VIX is currently elevated. This indicates that investors are fearful. Section 9. Investors brace for continued uncertainty. The trade war is ongoing. It is unclear how long it will last. It is also unclear what the ultimate impact will be. Investors are cautious. They are waiting to see how the situation unfolds. They are also looking for signs of a resolution.